without a doubt, one of the top three questions I get asked as a fee-only financial advisor for over 20 years is, hey, Azul, what do you think the stock market's going to do? You know, and depending on the time of the year, it might be, what do you think the stock market's going to do next month or for the next 6 months? But as we approach the end of the year, everybody asks me, what do you think the stock market's going to do next year? And this is a super interesting time because 2022 and 2023 were kind of opposites of each other. In fact, as I record this, right, 2022, the market was down about 18%. And as I record this in 2023, the market's up a little over 20%. And it's almost exactly where the stock market was on January 1st, 2022. So we've almost gone full circle. We had a hard year in 2022, and we've had a good year despite a lot of concern in 2023. And the end result of those 2 years is we're basically flat over the last 2 years. Now there's different markets. I'm talking about the S&P 500, and it's different for international markets. It's different for high-tech companies, NASDAQ companies. But in general, the broad U.S. market is basically flat over the last 2 years. And so the question is, you know, what's the market going to do next year? And you know, I want to take you back to the end of 2022. I want to take you to the beginning of 2023. The market had just been crushed. The Valent tech stocks even got taken down. Interest rates were rising. Most of the pundits on television were saying any fool can see that there's going to be a recession in 2023. And yet here we are towards the end of 2023. And the U.S. just printed a GDP growth, an annual GDP growth of over 5%. And so what does that tell you? I mean, these are super smart people. These are not dumb people that are getting interviewed on television. It just shows how hard it is to predict what the market's going to do, what the economy is going to do. And so that's what I want to talk about. I'm not going to throw my hat in and say, this is what I think the stock market's going to do in 2024. But what I can tell you is, no, I'll let you know the secret. Nobody knows, right? And if you did know, you could make so much money, you wouldn't be on television, right? If you knew with certainty, but none of us do. And why is that? You know, let's use this case of the rising interest rates and how difficult it is to do a soft landing when you have to raise rates to slow down inflation. It's almost impossible to do that without causing a recession. It's almost impossible, but maybe we're going to do it. You know, it might happen again. I don't know. And neither does anybody else. So what do you do? What does this mean for your stock investments? You know, I like to look at the things that you can depend on year over year. What are some of those things? You know what? I know with certainty that next year, as humans, we're going to be impacted by fear and greed. There's going to be some scary headlines out there, and we as humans are going to be impacted by that. And the market is trying to draw a line and say, you know, what does this mean 3 months, 6 months, a year from now? And so it amplifies oftentimes both the bad news and the good news, and it also brings it forward in an attempt to predict. And so while I don't know what the market's going to do, I do know how we act as humans. And that's what I want to talk about. Really, the importance of having a long-term game plan and having an asset allocation that, you know what, if we do enter a recession next year, which right now the market's not expecting, so the market would be hit and probably hit pretty hard, right? I mean, November of 2023 was a very strong month in the stock market. And part of that is because people think the Federal Reserve is not going to increase rates next year. In fact, they think they're going to start lowering interest rates. And as hard as the stock market is to predict what's going to happen, interest rates are even harder. It is like the hardest thing to forecast. So look how many people, you know, going into 2023 thought that, you know what, the Fed was going to slow down the rate. They thought they'd already done enough. So oftentimes the prevailing wisdom is wrong, particularly, for sure with the stock market, right? If the prevailing wisdom was always right, we'd all be making a ton of money. But for you to make money, somebody else has to lose money, because when you're buying a stock that's low, somebody has to be selling that. So it's hard to do that. So what can you count on? You can count on when the market's down, you're going to feel scared. You can count on when the market's up, you're going to love it. It's going to feel real good. And you're going to think, why do I have these bonds? Why am I not 100% in the stock market? So we can count on human nature. And what do we know about the impact of our human nature? There's a third-party think tank that's called Dalbar. And they studied what's called behavioral economics and how we as individual investors do. And they have come up with what they call the behavior gap. It basically says because of our emotions, we're taking a big drag on our investment results. So what I would encourage you to do, and this isn't financial advice for you, I don't know your situation. First, what I'd encourage you to do, and admittedly I'm biased, is work with a fee-only financial advisor to help you come up with a long-term allocation. Because at least historically, what we do know is, while 1 month, 1 week, market volatility up and down can be pretty extreme, certainly even 1 year. But as you expand that time horizon out to 5 years, to 10 years, to 20 years, it really lowers that volatility quite a bit. You'd have to be very, very unfortunate to go through a 20-year period that doesn't see a positive return in the stock market. It doesn't mean it can't happen, but the odds are dramatically in your favor. So I encourage you to work with a fee-only financial advisor. And if you're doing it yourself, I would encourage you to think about both the good times and the bad times and how you're going to react to that. And one of the things that makes this harder is as we get older, the balance in our accounts go up, which is a good thing, but it also means a 20, a 30, or a 40% drop in the stock market can really feel devastating. And if you're in 100% of the stock market and you're feeling the brunt of all of that, that can feel pretty bad. So think about that now, and one silly exercise you can do is just fill out some envelopes. Let's say you've got your total investments are worth $500,000. And, put in the envelopes, these are your quarterly statements on your account. And have one of them, could a 60-40 account be down 20 or 30%? It's happened in the past. So 30% of $500,000, in one quarterly statement and one annual statement, that balance, you open up the envelope and it says, okay, surprise, here's your balance. And again, this is just a hypothetical, just something for you to think about. And if you're married, have this conversation with your spouse. But you open up the envelope and it says, you're up $50,000 and maybe you're putting in $25,000 a year into your account. So if the market's up $50,000 in a quarterly statement, you're thinking, woohoo, this feels great. It would have taken us 2 years to do what we just earned in the market. And that's what you're hoping for, right? That compounding interest. But it cuts both ways with the stock market, right? Volatility is a feature of the stock market, not a bug. So then you open up the next envelope and it says, you're down 25%. Well, on a $500,000 balance, you're down $125,000. That's a lot of money. And it's just human nature to think, I'm putting in $25,000 a year. That just wiped out 5 years worth of sacrifice and hard work. And that's one of the reasons that it feels so awful. So better to do this now when the stock market's up and doing well. And so what do I think the stock market's going to do in 2024? The secret is I don't know. And again, nobody else knows. But here's what I do know. I do know that this video here that talks about average income for retirees is one of my most popular videos, and hopefully you'll find it helpful as well. I'll see you in there. Bye-bye.